Did you know that some of the very first banks weren't about money at all? They were about food. Thousands of years ago, people needed a safe place, a place to keep their precious grain. Grain was their most valuable possession. It was like gold to them. It fed their families. It helped their communities survive hard winters. Imagine a giant pile of golden wheat. It stood taller than a school bus. This was someone's entire life's work. People wanted a secure spot for their extra harvest. They trusted important community leaders with it. Priests often kept these large stores safe. These priests stored the grain in grand temples. These temples became like ancient storage vaults. They were the very first banks in human history. This simple idea of keeping valuables safe started something huge. It led to the powerful financial institutions we see today. Banks are everywhere in our modern world. They are more than just buildings. They help us buy new homes. They help entrepreneurs start businesses. They connect people and money across vast oceans. But how did we get from sharing grain to global financial networks? It's a surprising and fascinating journey through time. We will discover how banks became so crucial to society. We will learn about something called interest and how it works. We will uncover their secret powerful impact on trade and wealth. Get ready for some truly amazing facts. Let's dive into the incredible story of banks. Our story begins even further back in time. Around 4,000 years before today, picture a vast sunny land. This was Mesopotamia. It lay between two mighty rivers. It is often called the cradle of civilization. Here, farming truly blossomed for the first time. People learned to grow huge amounts of barley and wheat. These crops were essential for survival. Sometimes a farmer would have a surplus. They had more grain than their family needed. Other times a farmer had too little. Perhaps a flood ruined their crops, or a dry spell caused a poor harvest. They desperately needed help to feed their families. They needed seeds to plant for the next season. This is exactly where early bankers first appeared. These weren't banks with tellers and vaults. They were wealthy individuals in the community. They were often powerful merchants or trusted temple officials. These people had extra grain. They had other valuable goods. They would lend these precious resources out. They lent them to farmers in need, but there was a very important condition. When the farmer paid them back, they had to return more. They paid back the original borrowed amount, plus a little extra. This small additional payment was our first peek at interest. Imagine you borrow a basket of seeds. You plant them and grow a whole field. You harvest many baskets of grain. You pay back the original basket of seeds. Then you add an extra cup or two. That extra cup was the interest. It was the price for using someone else's property. It was payment for the lender taking a risk. The risk that you might not be able to pay back. This ancient system was truly revolutionary. It helped entire communities survive famines. It allowed people to recover from terrible hardships. It also slowly made the lenders much wealthier. This practice created the basic foundation, a foundation for all banking systems that followed. It showed how lending could help individuals, and it revealed how it could also generate more wealth. This simple exchange sparked an economic revolution. As ancient civilizations grew larger, so did the need for banking. Let's look at the grand ancient Egyptians. They built incredible temples. These temples were not only for worshiping their gods, they served as massive storehouses too. They held enormous quantities of grain. They also protected precious metals, things like gleaming gold and silver. People felt these sacred places were incredibly safe. No one would dare steal from a god's own house, so people brought their most valuable possessions here. They trusted the temple priests with their riches. The temple priests kept very careful records. They wrote down every deposit. They noted who deposited what and how much. And yes, they even loaned out grain or metals. They charged interest, just like in Mesopotamia. The mighty Roman Empire also had similar systems. Their public temples were used as treasuries. They managed vast amounts of public funds. The Romans even had special money changers. These skilled individuals exchanged different kinds of coins. They helped travelers and merchants. They often worked on simple benches in the bustling marketplace. Here's a fun fact for you. The word bank actually comes from this very practice. Banca is the Italian word for bench. So, when you visit a bank, think of those ancient benches. Now let's fast forward many centuries. Imagine medieval Europe. People started using more and more gold and silver coins, but carrying large amounts of these coins was always very risky. They were incredibly heavy to transport. They were also very easy targets for thieves. So, people looked for trusted individuals. They went to skilled goldsmiths. Goldsmiths had strong, secure workshops. They had heavy, fortified vaults. These were perfect for protecting valuable metal. People would deposit their gold gold with these goldsmiths. In return, the goldsmiths gave them a special receipt. This receipt was like a fancy IOU. It stated how much gold they had in the vault. This piece of paper became extremely important. It was proof of their deposited wealth. Soon people started using these receipts instead. They used them to pay for goods and services. Imagine you want to buy a new pair of sturdy shoes. Instead of handing over clunky gold coins, you give the shoemaker a receipt. The shoemaker accepts it readily as payment. He knows it represents real gold. He can redeem it later himself. This was a gigantic leap forward for banking. These simple receipts were like the very first paper money. They paved the way for modern banknotes. The clever goldsmiths noticed something truly amazing. Most of the time, people did not take all their gold out. Their strong, secure vaults always held a huge amount of gold. Only a small fraction was ever requested back. People usually left their gold for long periods. So the goldsmiths had a groundbreaking idea. What if they loaned out some of this gold, the gold that was just sitting there unused? They could charge interest on these loans. Then they would make even more money for themselves. This was a truly brilliant but also very risky idea. It worked perfectly as long as not everyone asked for their gold back at the same time. If too many people wanted their gold, the goldsmith would be in trouble. This groundbreaking practice is called fractional reserve banking. It means banks only keep a fraction of the total deposits. The rest of the money, or gold in this case, they lend out. It sounds a bit daring, doesn't it? But this is precisely how banks still operate today. This clever system allowed much more money to circulate in the economy. It helped many new businesses get the capital they needed. It helped countless people buy bigger, more expensive things. It made entire economies grow much, much faster. Think about that. The money you put into a bank might not actually be sitting untouched in a vault. Most of it is lent out to help other people buy homes or to help businesses expand and create jobs. This is how the banking system actually creates new money in the economy. It helps money move around and keeps economies humming. It's like magic, but it's really just very clever accounting and a lot of trust. The goldsmith's special receipts quickly became what we know as banknotes. These banknotes were far more convenient than heavy gold coins. They could be carried easily in a small purse or pocket. They could be quickly traded for all sorts of goods, and they were backed by the goldsmith's stored gold. This revolutionary system quickly spread across all of Europe. It led to the establishment of the first true banking houses. These were large institutions with many, many customers. They offered much more than just safe storage. They provided complex loans and efficient money transfer services. They were essential in helping merchants trade goods across different lands and seas. The next big leap in banking happened in a vibrant place. It was during a special time called the Italian Renaissance. This was a period of incredible art. It was a time of groundbreaking discovery. Cities like Florence and Venice truly blossomed. They became bustling centers of international trade. Merchants bought and sold valuable goods. They came from all over the known world. Imagine a huge bustling marketplace. It's noisy with chatter and full of bright colors. You might see exotic spices from the Far East, luxurious silks from distant China, or wool from England. All these goods changed hands in these vibrant Italian cities. But moving large sums of money was still a huge problem. It was incredibly dangerous to carry large amounts of gold coins. Thieves were always a constant threat on the roads, so an ingenious new banking tool was invented. It was called a bill of exchange. Let's imagine you are a merchant. You live in London. You want to buy expensive silk in Florence, Italy. You certainly don't want to carry all your heavy gold across the entire continent of Europe. So you visit a bank in London. You deposit your gold coins there for safekeeping. The London bank then gives you a very special letter. This letter is your bill of exchange. You then travel to Florence with just this important piece of paper. It is much lighter and safer. In Florence, you simply go to a partner bank. This bank is part of the same network. You present your bill of exchange to them. They then give you the equivalent money, but in the local currency of Florence. You pay a small fee for this amazing service. This system was absolutely revolutionary for international trade. It made commerce between different countries much, much safer. It made it incredibly more efficient and faster. One particular family became the absolute masters of this clever system. They were the famous Medici family. The Medici were not just enormously rich, they were also incredibly powerful. Their banking network was like a gigantic web. It had branches in all the major cities of Europe. It stretched across the entire continent. The Medici Bank funded powerful kings and even popes. They generously supported legendary artists like Michelangelo. They helped bring about the magnificent Renaissance itself. The Medici family didn't just run a bank that handled money. They literally shaped the course of history for centuries. Their vast wealth and banking influence affected politics, art, and even religion. Their clever banking system was so successful, it helped to build entire new ways of thinking, creating, and living. It shows just how much power financial institutions can hold. The Medici proved that banks could change the world. So, how exactly do banks work in our world today? Let's simplify it with a familiar comparison. Imagine it like baking a delicious cake. You, the customer, put your money into a bank account. This action is called making a deposit. The bank doesn't just keep your money untouched in a big safe. That would not help anyone. Instead, it holds a tiny portion of it. This small part is used for the bank's daily operations. The vast majority of your money is lent out. It is lent to other people who need it. People need money for all sorts of important reasons. They might want to buy a brand new house. This type of loan is called a mortgage. It helps families own a place to live. They might want to start a brand new business. This helps create jobs and new products. Or they might need a loan to buy a new car. When someone takes out a loan, they promise to pay it back. They pay back the original amount they borrowed, plus that extra bit we talked about earlier. That extra bit is called interest. The bank charges this interest on all the loans it makes. This is how banks earn most of their money. It's their primary way of making a profit. Now, what about your money that you put into the bank? Sometimes the bank actually pays you a little interest. This is usually a small amount. It's their way of thanking you. It's for letting them use your money while it's in your account. The interest banks charge on the loans they give out is always higher. It is higher than the interest they pay you on your savings. The difference between these two interest rates is the bank's profit. Think of it like a community library. You lend the library your favorite book, your money. They then lend that book out to other eager readers, the loans. When the other readers return the book, the library gets it back, loan repayment. They might even charge a small late fee if it's overdue. That's like the interest. And they might give you a free bookmark for lending your book. That's like the interest they pay you. This system might seem simple on the surface, but it is incredibly powerful. It helps money flow constantly through the entire economy. It makes huge purchases possible for everyday people. It helps countless businesses grow bigger and stronger. This, in turn, creates many more jobs. Without banks, these vital activities would be much harder to accomplish. Banks do much more than just making loans and holding deposits. They are truly like the crucial blood vessels of the entire global economy. They help money move quickly and efficiently all around the world. Imagine a company right in your local town. It makes amazing toys. Now it wants to sell those toys to children in another country. Banks are essential for helping that company receive its payment. They handle the complex process of converting different currencies. For example, changing dollars into euros or yen. They make international trade possible for everyone. Banks also offer many other helpful services for you. They provide convenient debit cards for easy spending. You can buy things without carrying cash. They offer online banking and mobile apps. These make managing your money incredibly easy and fast. They help you save diligently for your future goals. Maybe a new bike, a special trip, or even college. And most importantly, they protect your hard-earned money. They keep it safe from theft or loss. Banks even play a massive role in helping governments. They help them manage their finances and pay for public services. Central banks are especially important players in this big picture. These are like the super banks for an entire country. They don't deal directly with individual people like you and me. Instead, they deal with all the other regular banks. They help to keep prices stable across the country. They carefully control the total amount of money in circulation. They are like the skilled conductor of a massive orchestra. They ensure the entire economy plays in harmony. Without these banks, our modern world would simply grind to a halt. There would be no easy way to pay for things instantly. No big big loans for building new factories, no funding for groundbreaking new inventions, no safe place to save your hard-earned money. Banks are absolutely fundamental to our daily lives. Even if you don't think about them very often, they are the quiet engine of progress. We have certainly come a long way from lending humble bags of grain, far from heavy gold coins and simple paper receipts. Today, most of the money in the world isn't even physical. It doesn't exist as coins jingling in your pocket. It's not banknotes folded in your wallet. Most of the money in our global economy exists only as numbers, just numbers in giant computers, numbers stored in vast digital databases. Think about this amazing fact for a moment. When you buy something exciting online, there is no physical cash exchanged. When your parents receive their paycheck, it often goes straight to a bank account. It's just a number that appears on a screen. Only a tiny, tiny fraction of all money in the world is actually physical. It's like a vast, invisible ocean of digital currency. Did you know that over 90% of the world's money exists only inside computers? It's not physical cash or shiny coins at all. Your bank account balance is just a number in a digital ledger. This invisible money allows billions of transactions to happen. They occur at lightning speed across the entire globe. It powers our super-fast digital world. It's truly amazing how far we've come from ancient barley. This digital transformation makes things incredibly fast and efficient. You can pay for something on the other side of the world. It happens in mere seconds, faster than a blink of an eye. This shift to digital money is still happening rapidly. It is making banks even more powerful and connected. It connects us all in brand new, exciting ways. From those first simple grain loans to the complex digital dollars we use today, the entire journey of banks is absolutely incredible. It shows human innovation at its best. So, after this amazing journey, why are banks so incredibly important to us? They started as simple, trusted places to keep valuable things safe, like a dependable friend holding onto your most precious belongings. But they grew into complex global systems that now fuel entire nations and continents. Banks help countless individuals achieve their biggest dreams. They help families buy their very first homes. They provide loans that help students go to college. They empower entrepreneurs to innovate and grow new businesses. They are absolutely essential for our entire global economy. They make trade possible between countries far apart. They provide a crucial sense of financial stability. They offer security for our wealth. Imagine for a moment a world completely without banks. It would be much, much harder to save up money safely. It would be nearly impossible for people to borrow for big projects. International trade would slow down to an agonizing crawl. Our daily lives would look very, very different. It would be a much tougher world. From that first humble pile of ancient grain to the complex digital banking systems of today, banks have always been built on a foundation of trust. Trust in keeping people's resources safe. Trust in lending money fairly and responsibly. Trust in helping society to thrive and progress. Their fascinating evolution truly reflects human ingenuity. It shows our constant need for security. It reveals our deep desire for growth and prosperity. The next time you walk past a grand bank building, or when you use your debit card to buy something, remember its incredible, long, and impactful history. A history filled with amazing innovation and powerful influence. Banks are truly everywhere. Now we want to hear from you. What surprised you the absolute most about the incredible story of banks? Was it learning about those ancient farmers lending grain? Or maybe the secret of the goldsmith's fractional reserve banking? Or perhaps the mind-blowing fact that most money is now completely invisible? Tell us your thoughts and questions in the comments below. We absolutely love hearing what you learned and what sparked your curiosity. Don't forget to give this video a big thumbs up if you enjoyed it, and subscribe to our channel for more fascinating facts. We explore science, history, and the natural world. See you next time for another amazing discovery.